and it's always a pleasure to have him join us here on Hard Money Watch. Good morning, Bob. Thank you for joining us today.
Well, good morning to you, and it's nice to be here again.
Okay. I want to talk about a variety of things, certainly the situation over in Europe, and I know you have some real insight into what is going on over in Greece as well. But I think to get to that part of the conversation, we really need to start with the banks, and the banks here in the United States as well. And this week they were reporting their earnings, and it was the most convoluted pile of garbage, to say it politely, that I've recalled seeing. We were seeing these DVAs, debt valuation adjustments, essentially taking assets that have dropped in value and counting them as profit. So you got the paper losses, they count them as a profit, they report earnings. It's all a bunch of garbage. And you mentioned in your most recent newsletter that the banks are still working on all of these mortgages that are underwater. They're not coming back anytime soon. So there's a huge, huge amount of debt there that they're not going to get paid for. And in reality, when you look at that, and we haven't even talked about the bond market, but we could look at the bond market as well. When you look at it all, banks in the United States and Europe are insolvent.
And you are absolutely correct.
And
it's been that way
we're
for
whistling
a long time.
We're whistling past the graveyard, acting like there's not a problem.
Yeah, well, the public doesn't know how to delve into these machinations that go on in the banking community worldwide. And the latest is, I think QE3 is going to be devoted to, and they should have started that on September the 15th, but they didn't. I think they were terrified, and that's because the Federal Reserve and Mr. Bernanke, if you had a rating system, they'd probably both be rated around 10 or 15 on a scale of 100. And so I think they're being forced to do a QE3, and that QE3 will, I think, and I'm just guessing, that what they'll do is they will go after these mortgages that lenders, banks, have that are underwater. And they're called MBS and CDOs. Mm-hmm. And what they are is bonds that contain mortgages. Mortgages that the bank, the bonds that the bank paid par for, which would be $1,000, that are now worth anywhere from 10 to 30 cents on the dollar. And so and the Fed has never, when they've done this before, they've never told us what they're paying for those mortgages. I mean, they might be paying par for all we know, but it's one of those deep, dark secrets, and they shouldn't be doing that. But be as it may, I think they're going to do hundreds of millions of billions of dollars in these failed instruments, and they're going to switch them over to their own balance sheet, which is almost up to $3 trillion. Mm-hmm. And what, do $500 billion? I don't know what they're going to do, but it's going to be a lot of money. And they're doing that for two reasons. That money, which will go into the balance sheets, that money is going to be used to buy long-term securities, which the Fed wants them to, and I'm sure that's part of the deal. And they'll use some of the money for speculating. And at the same time, they'll have moved bad assets sideways over to the Fed. And so it's all a Ponzi scheme. Every American major bank is broke. In Europe, the same thing, and in England, the same thing. It's just a Ponzi scheme. And I, quite frankly, don't know how they're going to get out of it without purging the system. And if they purge the system, and this is a very, very important point, if they do that, all the bankers, and probably brokerage houses to some extent, will go under, and they will lose their power. And these are the people who are the power behind government. If you look at the contributors on both both major parties in America and in England and the several parties in Europe,
absolutely,
you will see that the majority of financing comes from that area, so to speak. And so they don't want to lose their power, and this is what this is all about. And that's why the economies of Europe, England, the United States have not recovered. They have no interest in recovering the economies. What they're interested in is saving their influential structure.
And so they are keeping the banks alive on life support, and that's bound to lead to one crisis after another. We appear to be in one right now.
This, Sinclair, is that every time a government picks up that kind of paper, whether it's in Europe, England, United States, the public is paying for it. So here are these people who created these terrible problems for those regions, getting taken off the hook by the governments. They call it ring fencing. Mm-hmm. I call it circling the wagons. And what they're doing now, and they're going to continue to do this, we saw this with Dexia 2 weeks ago in Europe. It's a big bank funded by the French and Belgian government, and they're bankrupt. So what they did is they made two banks out of it. They left the good assets in the Dexia Bank, and they took the bad assets and put them in Dexia Bank B, and they'll write them off. You know how many years? 50 to 100 years they're going to do the write-off. I mean, it's laughable. And the public doesn't understand because they're not specialists in this world, so to speak. And I am. I know what they're doing.
Yeah, but it is admittedly an arcane world that you're talking about here. You can't really expect most people to be aware of it.
No, you're right. And that's why I get on television 40 hours a week and tell people what's going on out there so they'll understand in very simple English, we're all getting screwed by the banks.
Now, another way, and this is kind of an A-B bank situation, good bank, bad bank, B of A, Bank of America, is trying to move a huge amount of derivatives, somewhere in the neighborhood of $53 to $75 trillion out of their bank holding side over to the retail banking side, which of course has some FDIC insurance to back up some of what they have there. This means really that the FDIC, which is backed by the U.S. government, which is the U.S. taxpayer, that means that they're really the ones in line. And the incredible thing here is if you go back to the 2005 bankruptcy laws that were rewritten in 2005, first in line in bankruptcy are the derivatives holders, not the depositors, the mom-and-pop depositors who have about $1 trillion in deposits at B of A. They're behind the derivative holders. It's a disgusting situation if ever I heard one.
You're absolutely correct. It's disgraceful. And they don't care what anybody thinks. They do what they want to do. It's just an incredible situation. And I think it was $55 trillion they moved. And J.P. Morgan Chase has the biggest derivative position. And they own about, this is an estimate, about 82% of all derivatives. And they've done the same thing with a very large amount as well. And so, where is all this headed? What these banks are being allowed to do is take, in unison, all of the bad assets, give them to the government, which is the people, and we get to pay for it. And they stay in business. It is beyond belief. And it's only because people don't understand those kind of things. And as you said, they can't be expected to. And they can't. And so that's why we do what we do. And that's how bad it is. And how do you stop it? You go to your congressman and your senators and say, look, I know what these people are doing, and I don't want that to happen. No, are you going to do something about it?
No, they're not, because they're bought and paid for by the banks. I mean,
you sound like me.
Well, Bob, you know it. I mean, I'm kind of preaching to the choir when I say this to you, but you can only serve one master. You cannot serve two masters. So the politicians are either serving the banks or they're serving the public. They can't serve both. It's impossible. And long ago, they made their decision. And the real simple way to see which of the politicians are corrupt is which ones have accepted money from the banks. And if they have, they're corrupt.
In the financial area as a whole.
Yeah, sure.
There's other purveyors of this elitist master of the universe attitude towards people. This is worldwide. And out of the transnational corporations, the insurance companies, the pharmaceutical companies, those 450,000 companies in the last 11 and a half years that have moved their business, manufacturing services out of the United States. And they're the same ones who have $2.2 trillion that they like to bring back into America and pay a 9% tax. The normal tax is 35%. Now, why should we allow them to do that? We should change the rule and say, no, all the money you got out there, you're going to bring it back at 35%. Why? Because the American taxpayer is going to lose $750 billion.
And no big deal.
And that money is going to go right into the pocket of the corporations. It's called corporatist fascism.
All we really got to do, is just cut our own taxes 70%, and we'll be getting as good a deal as the corporations, right? That'll fly, won't it?
It sure will with me.
It'll fly with you. It'll fly with me. We're about the only ones it's going to fly with, though, because the government's not going to do that because, again, we know who they're bought and paid for. We're talking with Bob Chapman, the International Forecaster. TheInternationalForecaster.com is the website. We're going to talk a little bit about Europe, and then we'll open the phones for your calls on Hard Money Watch. Bob, I know that you have some unique insights to share with us of what's going on over in Europe and specifically in Greece. I know you've just been researching like crazy, and I know you have some people who provide you solid information. So what's the latest that you're hearing from Greece, and where and how do we expect this crisis in Greece to unfold?
Well, there was a formula that was presented to Greece, and it was supposed to be reached a couple of weeks ago, and it wasn't. It won't be until next year, at the end of next year. And so they haven't been able to fulfill the austerity measures that have been dictated by the IMF, the European Central Bank, and the Eurozone members. And so the question is, are they going to get the money that they need? And they need more than they had anticipated. And I think the answer to that is yes. The problem is this. They have a debt that is perpetually unpayable. And on the other hand, they have people who are demonstrating. And I saw on Friday that the government, who hires mercenaries to come in and cause trouble, there were about 200 of them. And they just walked through the police lines because the police are in on it. And they started beating people with clubs and axes, and one man was killed. And these are people who are doing nothing. They're just standing around. And so the government, which is run by a communist, Mr. Papandreou, and his father preceded him 20 years ago in the mid-'80s, he probably stole more money from the Greek people than anybody in history. And so this person, Mr. Papandreou, and his henchmen are all members of the Illuminati. They are members of secret organizations. And they tried, actually, essentially, at the beginning, to take the country down so that the banks could use the debt that they have to trade the debt for things that the Greek government owned, like the Parthenon and all the ports and the airports and so on. And that didn't work too well because